Good afternoon. We are doing it live right here, getting right down to business with the News Driven Hour right after Ben Shapiro and just before the 790 KBC News Blitz with Randy Wang at 5. We are doing more at 4 in the afternoon here. Mottek On Money live on the air in 790. KBC streaming live online worldwide at kbc.com and the on-demand podcast at kbc.com, Apple, iTunes, YouTube, all your favorite podcast platforms. A mixed start to the new week and the second quarter of 2024 after a record-shattering first 3 months of the year. Stocks closing mostly lower today to kick off the second quarter. Looks like the rally that has recently brought all three of the major averages to record highs took a bit of a break today to kick off the month of April. No April Fools here. The Dow coming in for a closing loss of 240.5 points, settling at 39,567. Happens to be the biggest drop we've seen in about 5 weeks or so. The S&P 500 pulling back about 11 points, and the Nasdaq gained 17. The stock and bond markets were closed on Good Friday ahead of the Easter holiday weekend. Hope everybody had a wonderful holiday weekend. We see the Dow closing off only 0.6% off the record finish last week, while the S&P 500 and Nasdaq reached 0.2% off their most recent record high closes. We see the price of oil bouncing today to a 5-month high, up about, moving higher to just shy of $84 a barrel. That is a 4-month high. This has an Israeli airstrike that demolished Iran's consulate in Syria today, killed 2 Iranian generals and 5 others, according to Syrian and Iranian reports. The strike appeared to signify an escalation of Israel's targeting of military officials from Iran, which provides money and weapons to Hamas and other militants responsible for the October 7th attack on Israel, and the war between Israel and Hamas continues. We're also what's happening with the United Airlines stock today, down about 1%. The company is asking its pilots to take time off in the month of May because of delays in receiving new planes that the airline ordered from Boeing, which is still struggling with production due to manufacturing issues. United shares moving lower. Boeing stock down nearly 2%. United does not expect to get all the Boeing jetliners it ordered and was due to receive this year or next. A month ago, according to MarketWatch, United said it was contractually due nearly 200 planes this year and 127 next year, but now expects to receive only 88 this year and just 64 in 2025. The economy, the number one issue heading toward the presidential election these days. The economy supposedly growing, unemployment still low, although at a 2-year high, and inflation officially easing, but still stubbornly high. Americans are grumpy about the state of the economy still. I'll talk about that with economist Veronique DeRugia, senior research fellow at the Mercatus Center at George Mason University. She'll be joining me live later this hour. A ray of sunshine in the fashion district in downtown Los Angeles. A new store is opening this week. Yep, a new store opening in the historic Gary Building. It's the new Union Rescue Mission store where proceeds will go to help the Union Rescue Mission help the homeless in Los Angeles, and that includes men, women, children, families, and seniors. The new Union Rescue Mission store will open at 10 a.m. this Thursday in the Art Deco Gary Building. That's at 910 South Los Angeles Street, and will sell only new merchandise with all proceeds going to help Union Rescue Mission help the homeless. I'll talk about the new store, an update on the homeless story in Los Angeles, and how you can help Union Rescue Mission. And I'll talk about it with Richard Newcomb, Vice President of Philanthropy and Social Enterprise at the Union Rescue Mission, coming up later this hour. But first, on your money, the markets, the economy, and the whole works now. Joining us live, investment expert Jim Hausberg, Managing Director at Hightower Advisors, the Hausberg Group in Beverly Hills. Jim, thank you very much for taking the call to kick off the second quarter of the year here.
Well, thanks for having me, Frank. It was one really, really strong first quarter. Today is just one other day, but markets are down a little bit. But seeing the S&P all-time highs, I read this morning that I think 22 record closes during the first quarter over the last, I'm going to say 40 years. Whenever the market's up 10% in the first quarter, 16 out of 17 years, the markets are higher by the end of the year. I'm not certainly suggesting 10% per quarter, but the only time the market was lower was 1987 when we had that little crash that we remember, about 20% down in one day in the Dow. So it should be a good rest of the year. The economy, as you pointed out, is strong. I guess some people are grumpy, but people are always grumpy about something, Frank. So overall, it's been a good market. Rates have moved up a little bit. We got to keep an eye on that. And so as the inflation numbers started coming down towards the end of the year, There was a lot of talk that the Fed would, lower rates 6 times. It now looks like more like 2 as the data has come out, not with higher inflation, but still a little stubborn. And the economy is moving along at a pretty good clip. So we're not expected to, see that slow down. And it's going to be tough, I think, for the Fed to lower. But that's what people are focusing on still. But I always say to you and your listeners, focus on the companies you own. Don't get caught up in the global macro stuff. It's too hard to call, and most people are wrong in making those calls.
On the live with investment expert Jim Hausberg with the Hausberg Group in Beverly Hills, Hightower Advisors. And we see the S&P 500, Jim, as you noted, so far so good this year, up 10% in the first quarter. Its best start to a year since 2019, even though two of the biggest parts of the S&P 500 suffered double-digit percentage declines, including Apple, down 11% in the first 3 months of the year, while Tesla plunged nearly 30%. I see on the front page of today's Wall Street Journal, the headline, Wall Street's Magnificent Seven narrows to become the Fab Four. And some say it's just the Magnificent One, and that would be NVIDIA. What about the this Mag 7 group, now the Fab Four or the Magnificent One, or the what are we down to here, Jim? What are your thoughts about the ones that have been leading the rally this past year?
I love it. If you look at Apple's performance over, 3, 5, 10 years, it's phenomenal. So it's had a quarter where it's down. Tesla's a volatile stock, Frank, for multiple reasons. First of all, the EV thing always comes into question, and I keep saying it's, the charging that makes it difficult, range anxiety, not so much with Tesla. But when you look at the automobile sector, it's still the biggest growth engine is the EV. But they're expensive, a lot of these cars, and I think maybe that's one of the issues. So everyone's focused on Tesla's delivery for the first quarter. It's not a cheap stock. You've got Musk, who is, become somewhat controversial over other issues besides the car. But, we still like it. It should be part of a portfolio. And many times when that stock has weakened, it's really made a big turn. I think one of the focuses for them is on the driverless car and where that takes them. And then the lower price model that they've been talking about, where they can make money on a car for $25,000, $30,000, much below where it trades now, and other EVs. So we'll see. It's a volatile stock. Apple's one great company. I'm not saying it's going to be a great performing year, but you don't want to give up on that. Microsoft is tremendous. Meta's done so well with Instagram and WhatsApp and all the other things that they have. Amazon continues to do very well. So I don't know, Fab 4 for 3 months. Fab 5 was a good basketball team back in the day, University of Michigan. So Wall Street comes up with all these names, Frank. We got acronyms for everything.
Right, and we stay current with all the names. So the Fab Four, just so that everybody can follow along at home here, NVIDIA, Meta, Microsoft, and Amazon. Those are considered the Fab Four here at the moment, all part of what had been the Magnificent Seven. And, of course, NVIDIA, still considered the Magnificent One here. What about NVIDIA following that record-shattering run-up in that AI rally?
No, the numbers are phenomenal there. $22 billion, I think, in the most recent quarter. Everybody's, spending money internally on AI, and it's NVIDIA is the play. It's hard to say if the stock at 900 is a buy, but it was 100 2 years ago, went to 400, now 900. So if you own it, I'd hold it. If you want to invest in it, maybe nibble in here. But forward earnings are good, but it's an expensive stock. I think we're trading at 75 times trailing 12. But earnings of $12, probably going to 15. Market cap is 2.2 trillion, so it's one of the large ones now. But as I say to people sometimes with these individual names that have made gigantic moves, not a lot of room for error, Frank. You have one quarter that disappoints, the stock could be down 20%, 25%, and then maybe rebound. But, it's made a huge move, and for all the right reasons. Very hard to say where it is going forward. If I owned it, I would hold it. If I didn't own it, I'd consider buying it on weakness. And that's the way I'd play that stock.
All right, on the air with Jim Hausberg. And Jim, you mentioned Tesla here, and but the other traditional automakers, the big three, as they were previously known, also in focus as this shift to the EVs continues. I see Stellantis' CEO says the company's staying all in on EVs. Stellantis, I'm still getting used to saying that name, was created about 3 years ago through the merger of Fiat Chrysler and the PSA Group, and now has 14 brands, including the American names Jeep and Ram, as well as Opel and Peugeot in Europe. What are your thoughts about the automakers as they go through this shifting here to EVs across the board?
The big auto, I don't know much about that Stellantis, but Ford and GM, they've just been heavy stocks, Frank, for a long time. They seem to be trades if you catch them right. Just not a huge fan of the industry, similar to the airlines. Every once in a while you may find something that works, but when you look at all these EVs and you look at where they're trading and you look at some of the charging companies, these stocks are way down. Tesla's been the big winner, and as you pointed out earlier, down 30%, over the last whatever period of time, first quarter. So I don't know. I wouldn't get all hot and bothered about owning these, any of them for that matter. But they are cheap. GM and Ford trade at low multiples. They have for a long period of time. I think you get a pretty good dividend in Ford, about 4.5%. I don't really follow GM, and I don't really know much about Stellantis, but it's not really the sector that I would focus on. I think there's better sectors for growth, and it's just not an area that to me is really worth spending a whole lot of time on.
Yep, well, certainly getting a lot of attention as this. There's certainly winners and losers as this transition takes place. So we'll keep an eye on all of that, and then of course there's crypto. I know you're not a huge crypto guy, and we of course talk to the biggest fans of crypto and the harshest critics. But you do pay attention to what's going on around you, and seeing a Bitcoin above 70K again recently, and hovering just below that now. It looks like. What are your thoughts on crypto at this point?
Yeah, well, I'm not a hater. I'm not a lover. I own very little. I've said before, the more it's used in whatever markets, the more valuable it becomes, and that holds true for some of the other cryptocurrencies and other coins. It's up 68% since January, Frank. So, I mean, and it's to try and figure out why, it's just not worth it because you can't figure it out. And there's been, some days in there and weeks in there that it's been down 10, 15, 20%. That probably will happen again. But there's got to be something to it. Maybe one day we'll understand it. I know JP Morgan's been very negative on crypto for a long time, and Jamie Dimon has pointed that out. But then I read all of a sudden that they have big positions in crypto. So I'm not sure who to believe on that stuff. But I just, if you're doing any sort of analytical work, it's just one of those tough ones to figure. It has momentum going and people are trading off of that. But, I don't know. Coinbase has done incredibly well for their, piece of the pie, so to speak, in crypto. Maybe that's a safer way to play it. But these things just move around too fast for me, and I just can't figure out a way to value them. So I'm happy for all the people that have made money, but you have to have the stomach for it because the volatility is pretty big.
Yeah. So from blockchain now to gold chain, I don't know if I mentioned it earlier, but gold at a record high here. We can't ignore that. Gold right now up around $2,272 an ounce, up about $15 here now. This at a time where we're told inflation is supposedly easing. All of a sudden, gold is at an all-time high, the traditional inflation hedge. What are your thoughts on gold here?
Well, I think gold seems to be following the bond market. Rates are backing up a little bit, Frank. Gold is moving to new highs. Energy is moving to new highs. If you have a strong economy, you're probably going to see higher oil prices. I think that's what that's tied to. And gold maybe as well. I don't think it's this great inflation hedge as it used to be, but, inflation's coming down from where it was. Gold's moving up. So go figure on that one. But again, another momentum trade. Not a huge fan of commodities. I like more of the industrial commodities, copper and so on. If we continue to build this infrastructure bill, that's a big thing out there. And these infrastructure companies are doing pretty well in some of the performance. So I think more of the industrial metals and industrials in general are probably a better place than gold because once again, you're guessing on where the price is going to be, and that's too hard. Not a lot of usage of gold except for jewelry, which, by the way, a lot of that stuff is moving higher. You look at some of these fancy watches and and the price on some of these are through the roof. So, there's probably a reason people are, collecting these things, and it's a little bit of an alternative to your traditional stock and bonds, and it's probably why it's getting some play.
Yeah, not only a traditional inflation hedge, but of course, at a time when there's geopolitical upheaval, people tend to turn to gold, and certainly with the upheaval in the Middle East, we're watching oil rise again to a 5-month high here, Jim, which of course affects the inflation story. Puts another fly in the Chardonnay there, close to $84 a barrel here now, a 5-month high for oil. That puts it at a new high for the year. What about oil and your outlook on inflation here?
Yeah, so I think, the oil stocks have been trading up for a bit, up about 11, 12%, some of the big ones, before oil started moving. So now oil seems to be catching up to the oil stocks. I've said it before, I'll say it again, not a huge fan of energy. When I look at the long-term charts on some of these stocks, they're great trades. You buy them when they're out of favor, sell them when they've moved. To your point about the Middle East, the war is sad. It's been going on for a long time. Obviously, Russia-Ukraine is bad. Today, I guess the Israelis blew up something. I heard you mention it. Maybe that's having an impact. If the supply routes get interfered with, and there's just battles out there, with the Houthis and others, if the supply chain gets interrupted, you could see oil moving higher. But I'm just more optimistic on that part of the world. I think they're going to figure something out over the next 6 to 9 months. I think the Saudis want peace, and they want to grow their economy, and they're doing a lot of good things there. And I think these other countries as well, they have to figure it out. But I don't want to get into all that on this call. But, it just seems right now that markets sort of have ignored what's gone on in the Middle East and Russia, Ukraine as well. And I think they'll probably continue to ignore that and focus on how well the companies within the S&P and others are doing. And companies are doing well, and earnings are going up. And as I said before, the economy is strong. So it's ignored a lot of this global macro stuff, which I think is a good thing. We now have the elections coming up, and we'll see the volatility around that probably in the second half of the year, depending upon things Trump might want to do if he wins and what Biden might want to do if he wins. And those stocks will bounce around a little bit depending upon that. But then again, that's all short term. I would continue to stay with growth. I would continue to stay with technology and use some of the weakness maybe in the Apples of the world to add to those. I like healthcare because I think it's recession resistant if things slow down. Real estate is one of the interesting areas because it's out of favor still. And there's a lot of old buildings that are coming up for refinancing. It's going to be tough what happens there with some of the banks. But some of these, REITs have rebounded quite a bit. So it depends what you own and where you own it, I guess, when it comes to real estate, which has always been the case. The banks are
all right. Well, I think you've just
better.
anticipated my last question there, which is where are you putting money now and taking it off the table?
Yeah.
So I think you've pretty well covered it, Jim, and appreciate it very much and look forward to our next conversation. Do you remain bullish at this point? Are you feeling good about this market?
Yeah, I feel good about the markets. I can't see another 10% return in the next 90 days, but I'll take it if it happens. But not too worried about the downside based on what I'm seeing now.
All right, terrific, Jim. Thank you very much for taking the call here this afternoon. That is Jim Hausberg, Managing Director at Hightower Advisors, the Hausberg Group in Beverly Hills. Thank you very much for joining us live here on Mottek On Money on 790 KBC. Right out to the freeways we go now. Let's check your ride this afternoon. Friends, if you're hurt in an accident, you need an experienced advocate, and Clark Fielding and his team of sharks at Fielding Law are on standby ready to dive into your case. My friend Clark the Shark is fearless for justice and your go-to attorney when injured in an accident that wasn't your fault. Whether it's a car accident, slip, trip, fall, or any kind of personal injury, Fielding Law is here to make sure you get the care, attention, and compensation you deserve. Fielding Law can assess the circumstances of the case, negotiate tenaciously with the insurance companies, and if necessary, file a lawsuit and litigate to seek fair compensation on behalf of you, the injured party. An injury is a major disruption in your life. Medical expenses, lost wages, pain and suffering, property damage, and other losses incurred as a result of that injury are all part of the damages. Don't try to handle the process alone. You need an expert in the process, and the team at Fielding Law are the ones to trust. Put Clark Fielding's number in your phone under the word accident, so you can bring it up right away. That number is 833-88-SHARK, 833-88-SHARK, or go to clarkthesharklaw.com. Mottek On Money continues here in 790 KABC. It's all about the money. Kicking off the second quarter of 2024 with a mixed start here, with the Dow down 240 points, settling at 39,567, coming off its all-time high. The S&P 500 down 10.5, also slipping from its record high at 5,244. The Nasdaq up 17 at 16,397. The yield in the 10-year note is shot back up to 4.32%. That's the one that impacts the fixed-rate mortgage rates out there. The price of oil suddenly at a 5-month high to $83.94 a barrel here at the moment. In the crypto space, we see a Bitcoin up about $30 now at $69,752. Ethereum up 6 at $35.03, and Doge now at 20 cents. Well, we wrapped up the first quarter of 2024 with impressive gains, with the Nasdaq up 9%, the S&P 500 gained 10%, and the Dow gained just about 6% in the first quarter of 2024. So you don't have to be scared about opening up your statement when it comes in the mail, or if you pull it up online. Gold, meanwhile, having a record run-up as well. Gold today hitting a record high. It's up $1,650 now at $2,273.60 an ounce. Gold, by the way, was up 8% in the first quarter. Oil has also seen a recent run-up, up 16% in the first quarter of the year, and hitting a 5-month high today, just shy of $84. And Bitcoin up 64% in the first quarter. And now the latest news for you here in 790 KABC. Mottek On Money continues here in 790 KABC. Good afternoon. Why are so many people skeptical about what's supposedly a rosy economy? Well, the way inflation is measured kind of mask certain costs that add to the prices consumers pay every day. Not surprisingly, higher costs mean lower consumer confidence, as we've seen in the past. As gas prices go up, consumer confidence goes down. And the Make America Great Again Trump Super PAC has built a Biden grocery store website now where you can pick your items, and then it tells you what the final bill would have been under former President Trump. Then it shocks the pants off you with what it costs now after 3 years plus of inflation. By the way, at the Southern California gas pumps, we're looking at $5.15, the average price for regular these days, $5.50 the average price for premium, both about 30 cents a gallon higher than where they were just about a month ago. Joining us live now, we have economist Veronique DeRougy, and always great to have you with us, Veronique. Thank you very much for taking the call here. Veronique is a longtime contributor to this program, senior research fellow at the Mercatus Center at George Mason University. Good afternoon to you, Veronique.
Good afternoon. Thank you for having me.
Thank you very much. Well, we just, our last guest was also under the impression that the economy seems to be doing quite well, but people are feeling grumpy, are they not, based on your latest article? Tell us more about that.
Well, yeah, I mean, consumer confidence is down. I mean, American people think we're going in the wrong direction. I think it's 65% of them think we're going in a wrong direction. And so a lot of people were puzzled by this because by all accounts, right, the inflation has gone down and the economy is growing and wage growth isn't bad. And so there's all these things, and yet people just won't give up. They're not happy. And so some people have, like Larry Summers and 3 other economists. Larry Summers was the Secretary of Treasury under Bill Clinton. He was a former president of Harvard, and he set out to kind of answer that question. Why is it that there's a gap between where economists looking at the data would think that the American people is and where they actually are?
On the air live with economist Veronique DeRougy, a senior research fellow at the Mercatus Center at George Mason University. Of course, the economy is the number one issue heading toward the presidential election, and it is a big political issue with the latest polls that was mentioned earlier that President Trump gets higher marks than President Biden at the moment on the economy. And that interesting comparison website that one of the Trump PACs put out there, comparing what things cost back during the Trump era and what they cost now. What strikes you in those comparisons?
Well, so before I read the study by Larry Summers, actually kind of providing a really decent explanation about what was going on, my explanation was that, yeah, well, inflation is down for sure. It means that basically the price of things isn't growing as fast as it used to in the last 3 years, right? That's all well and fine, but price of things are still high. I mean, people going to the grocery store still find that the things they buy is roughly on average 20% higher than they were 3 years ago. Renters face still price of rent that is significantly increased, and you can do this for gas, you can do this for everything else. So the price of the fact that inflation is down is it's a good thing. Basically, things don't deteriorate as fast as they used to, but things are still pretty bad. And what Larry Summers and his co-authors found that the reason why people are still probably very unhappy is that actually, if you measure inflation the way we used to measure it before 1983, so last time we had an enormous boom of inflation, inflation is still at 8%, and it would have had peaked at 18%, which was significantly more. It was 4% more than during the 70s, which again was the last big inflation episode in the U.S. And so when you actually measure and take under consideration the cost of money, the cost of higher interest payments, which now we don't count in the new inflation measure, then you understand why people still have a sense. In addition to the fact that the price of things is still very, very high, why people are so grumpy.
And Veronique, here in California as of today, and it's making, of course, national news. Today, California's new $20 minimum wage for fast food workers kicked in, which we talked to the great Angela Marsden about this last week. And this increase is certainly affecting her and all mom and pop operations out there as well, not so much the big players. So what do you think, what impact will this have, the increase, the required minimum wage here in California for fast food workers going up to $20 an hour?
So two things, the economic literature tells you that two things happen, right? Some of the employees that were paid less than this, they're the ones who are going to see, and whose job are not at risk are going to see an increase in their wage, and that's well and fine. But actually, what is not well and fine is like a lot of people will, either lose their jobs or they will get reduced hours, and because the employers can't pay that much, or they don't get that much out of, or it just basically makes the cost of the employees much more expensive. But the other thing that is not very visible is actually all the people who won't be getting a job. So all the firms and all the small, especially small places, who won't be hiring an extra employee because it's now too expensive and out of reach for them. And all these workers who could have had a job and won't have it because of that mandate to increase the hourly wage to $20.
Veronique, we're also watching the price of oil and gas move higher again with this upheaval continuing in the Middle East, and the latest military action there today, with oil at a new high for the year here, a 5-month high, close to $84 a barrel here at the moment. What is your outlook for inflation here, especially as it relates to the energy sector, where we're seeing this upward pressure again?
Well, so, I mean, energy, usually we look at, when we talk about inflation, we actually talk about often core inflation, which takes out the price of food and the price of energy, because these are two things that are very highly variable, and it just kind of, the assumption at the very least is that it gives you a better read about the trend in which inflation is going. So, the fact that if supply is constrained in the energy markets, so the price will go up, and of course it will take the inflation measure up. But the good news about this is, like, unlike the price of food, like we've talked about, which is still high, when the supply loosen up, right, the price of energy and gas will go back down. Now, unfortunately, there are also forces due to the Biden administration that constrain energy supplies that are actually will be counteracting the reduction in price when the supply becomes more loose, because the Biden administration is really doing its hardest to actually make energy more expensive.
Veronique, wish we had more time, but we'll have to stop there. Thank you very much for your thorough assessment of the economy and all things relevant to consumers and our listening audience. Veronique DeRougy, Senior Research Fellow at the Mercatus Center at George Mason University. Thank you very much for joining us live here this afternoon.
Thank you for having me.
Right out to the freeways we go now, 790 KABC. Mottek On Money continues here in 790 KABC. Good afternoon. A ray of sunshine in the Fashion District in downtown Los Angeles. A new store is opening this week in the historic Gehry Building, beautiful Art Deco building. It's the new Union Rescue Mission store, where proceeds will go to help the Union Rescue Mission help the homeless in Los Angeles, and that includes men, women, children, families, and seniors. The new Union Rescue Mission store will open at 10 a.m. on Thursday in the Art Deco Gehry Building at 910 South Los Angeles Street, and will sell only new merchandise with all proceeds to URM to help the homeless. Now, this is a big month for the Union Rescue Mission. The URM's biggest fundraising event, a TV special on CBS 2, is coming up on April 20th. Joining us live now, Richard Newcomb, Vice President of Philanthropy and Social Enterprise at the Union Rescue Mission in downtown Los Angeles. Richard, thank you very much for taking the call here this afternoon.
Thank you, Frank. Thrilled to be on your show once again. Always a pleasure.
Wonderful to have you with us. And this is big news, a new store opening in downtown Los Angeles. Tell us about what's going to happen there on Thursday.
Well, Thursday will be open, as you said, at the Gehry Building at 910 South Los Angeles Street, right off the corner of 9th and Main, across the street from the California Market Center, where I was an executive in the fashion industry for over 30 years. And we had the great opportunity to hire Miss Ella Van Noort, who was a professor at FIDM, Fashion Institute of Design and Merchandising downtown, and they had a fashion store of this nature downtown for years, and have a big following of fans that have supported it. And I don't know if folks know this, but FIDM is going out of business. They'll be done in June. They've been purchased by Arizona State University and their fashion merchandising program there, and so FIDM will be completely gone by June, but they shut down their store last year, and so we grabbed Ella and hired her to run our store and become our director of retail operations. We have two existing stores. They're different from this store, though. I just want to make that clear. They're URM Thrift and Boutique, and those two existing stores, one in Covina and one in Whittier, are about 50-50 thrift and new items donated from the shoe and the fashion and the home industry that have helped that model prosper by having this balance, kind of a unique blend of product. And they've grown and thrived over the years, and each store is doing over $1 million, helps generate revenue to help run our programs here, to help get more people off the streets, and provides employment for graduates of our program. So this one we're excited about. It is new product only. Just want to be clear that I don't want to have anybody showing up there on April 4th or thereafter looking for used items. It is all brand new items donated from the fashion, the shoe industry, the home industry, home goods, etc. And we're super excited. It's a pop-up store. We'll give it 6 months, thanks to the support of the very generous owner of the Gehry Building. And we're super excited and hope this store is going to be a lasting location for us to help, again, generate revenue to help us fight homelessness and create jobs for folks that have come through our doors and are looking to turn their life around.
On the live with Richard Newcomb, Vice President of Philanthropy at Union Rescue Mission, and this is going to be big news on Thursday, and so appreciate the preview on this. The store is going to be quite a place for bargain hunters, priced below wholesale, I understand, and all the fashion items there donated by local manufacturers, retailers, and showrooms. So that is going to be really something special there. And the beautiful Art Deco building, the Gehry Building there at 910 South Los Angeles Street. Now, this is all part of the big fundraising push, obviously, at a time when the need is bigger than ever. Richard Newcomb, you've kept us well informed about the homeless numbers in downtown Los Angeles and what URM is doing to help the homeless. And another big fundraising event, of course, also coming up on the TV special on CBS 2 on April 20th. Give us an update on all of that, please.
We're super excited. This is a ballroom gala pre-pandemic, and in 2020, 5 days before that event was to take place at the Beverly Hilton Hotel with about 400 people on hand, hoping to raise $1 million. The pandemic hit, the NBA shut down their season, and we had to scramble and figure out how do we fill that hole in our budget and still make this a fundraiser. So we scrambled and we took a leap and we bought 60 minutes of time on KCAL 9 in 2020, and all the studios were shut down. The television industry didn't know what to do. It was just in the infancy of the pandemic rolling out, and we broadcast with the donation of a free satellite truck from CBS, and broadcast from Joel McHale's garage, the actor-comedian who's been a huge supporter of ours and is still with us for this event to this day. And we took the leap into television, and an event that we had raised $900,000 in 2019 in a hotel ballroom raised $1.8 million. So this year we are back we're on CBS now. We graduated because they were so impressed with what we did. They invited us on to CBS, and we're on April 20th, co-hosted by Joel McHale and Natalie Morales from the set of The Talk in front of a live TV audience. And we have a $2 million match this year, Frank. So we're super excited. The most we've ever raised from this show was $3 million in the last few years, and we have a $2 million match. So any donation as a sponsorship or as a outright donation or a purchase of a auction item, which will have a giant auction with 300 items that'll be online all week long and will close 30 minutes after the show that night. So we're hoping to get to $4 million. We can use every penny to help get people off the streets. We're an efficient and effectively run organization. We get a 100 rating from Charity Navigator, so you can give with confidence, and 85 cents of every dollar is going to life-saving programs. So we're super excited, and we hope people will tune in.
That's impressive, Richard. And before we run out of time, what's the best way for people to support Union Rescue Mission?
Well, if they're looking to double their donation, they could become a sponsor or make a donation at helpurm.org. That is the Angels of Hope TV special website, where that $2 million match is present and will be matched for every dollar there. And so we'd love people to do that. They could also shop the auction that will go live through that same domain, same website, helpurm.org. That'll launch on Saturday the 13th. We have a lot of great items, over 300 from trips and amazing items, restaurant, gift cards, etc. Lots of wonderful things. Or they can visit our regular website, urm.org, as well.
Richard, thank you very much for that important update, and we'll see you there for the grand opening of the Union Rescue Mission store in downtown Los Angeles in the Art Deco Gehry Building at 910 South Los Angeles Street on Thursday morning. Richard Newcomb, Vice President of Philanthropy at URM, thank you very much for joining us live here on Mottek On Money on 790 KABC.
America starts the day with America in the Morning.
First of 3 pushes of storminess.
Hi, I'm John Trout, your host for the latest news, politics, entertainment, business, and weather.
A speech with political overtones.
Our staff of correspondents provide a fast-paced look at the world with specialized reports from where news happens.
The judge's decision was based on finding there is a
so
likelihood.
So far, the central bank appears to be threading that.
Concise, accurate, and fresh each day.
America in the Morning, the podcast, available wherever you listen.